All right. All right, now it's working. So howdy everyone, welcome to our fourth virtual meeting for this semester. Right now we have around 21 people in the participant table, but I'm pretty sure more people are gonna be rolling in. That's usually how it comes. People come in a little bit later than the start time, but we're gonna go ahead and get started since our speaker is here and ready to present. And we will be recording this meeting for our YouTube channel. So if you're seeing it on there, just be sure that if you have any questions, feel free to email us. I'm pretty sure Nick will give out the contact information for the Money Education Center in case you have any questions for them as well. So I'll pass it on to Monica. If I could figure this out. Oh, there we go.
All right. Hi, everyone. Thank you guys for coming out tonight. Before we actually begin, if I could just ask everyone to sign in, you guys could, oh, well, Kevin sent the link, he beat me to it. Or you could just scan it, and once everyone signs in, we can continue.
All right, and that's just basically our announcements for now, but without further ado, I'm going to go ahead and virtually pass the mic to Mr. Nick Kilmer, who is also my boss and is going to be on a future podcast episode. So we look forward to having you on there as well. So Nick, you should be host right now.
Okay, sounds good. Let me share my screen real quick. Okay, can y'all see that? Let me see if I can bring this up. Give me 1 second. I want to move this to where it's right here. Oh well, we're just gonna do it weirdly. Okay. I have two screens and I'm at home and I don't know how to operate both of them apparently. So we're just gonna run with this. Can y'all see the image of the Money Education Center? Awesome, terrific. So again, thanks for having me, Kevin. I really appreciate it. Again, blown away when I got your email outlining everything that FGA has become and everything y'all are hoping to do. Seriously, kudos to the professionalism y'all have implemented here in this student organization. I don't mean to badmouth any other student orgs, but I haven't seen it this structured this well so far. Like that is it's amazing. And I think that says a lot for what you're going to accomplish over time, and a lot about also how much y'all are investing into it. So I'm excited to be here. Kevin had asked if I could tell you a little bit about, just some financial tips and try and tie it back to the pandemic we're in and COVID that we're facing and what can you as students, and then I'm going to toss into as former students, do to try to be better prepared the next time like something like this occurs. We had the 2008 financial crisis. Now we've got COVID as a financial crisis. There will be more in the future. And so I thought to myself, what are some recommendations I have? And I'm going to go through those. But I just want to emphasize, I do not want a monologue. I would prefer for this to be a dialogue. And if we need to go down a rabbit hole that you're interested in, I'm totally game for that. Let's do it. So just stop me anytime. But since I know 3 people right now on the call, they're from the Money Education Center, so you know what it looks like. But for the rest of y'all, this is our Money Education Center. And I'll just tell you a little bit about me. My background is money. But more than anything, it's not just financial, it's about service. It's focused on, my personality is that I want to help people with money. So every career that I've had to some degree did that. I slowly fine-tuned it, and I can emphasize to y'all as you graduate, your first job will not be your last job. I started as a bank accountant. I will never go back to being a bank accountant, but I learned what I liked and did not like in that job. And after each job that I took next in my career, I learned something new. Eventually, I was a financial planner for my dad when his cancer got very bad, and he needed me to help run his business. And when I did that, I learned from him that even though I have certain skill sets, and y'all will too, a variety of skill sets, just because you can do something doesn't mean you should do it. Do something that'll make you happy every day. And what he was talking about was accounting and analysis. I can do those things. They don't make me happy. What makes me happy is working with other people, helping to take away the fear that their finances bring them. And so ultimately I found my way into money education, which is my dream job. I will say that when it comes to money, and one of the reasons I'm excited to talk to y'all is, although I'm not a first generation Aggie, my father, he definitely took the long road to getting into college and being the first in his family to go. He had a harder upbringing. Part of it he didn't get to spend with his own parents. Ultimately, he was headed down a bad path, but he joined the Navy, and the Navy kicked him back in the right path. And afterwards, he ended up going to Pan American, earning his degree. But I'll say a lot of that was done on his own shoulders. He worked hard. It was a struggle. But after he got that degree, how it changed his life is just black and white difference. He became a CPA. He became a CFP. He ended up owning his own business, very lucrative business. And then he emphasized the importance of a college education, specifically an Aggie college education. To my brother and I, my intent was to go actually to Maryland or Richmond, and that was not what he thought was best for me. So he said, just visit it once. Visit A&M once. We visited once. That's all it took. Fell in love with A&M. Met my wife here in my first semester. I don't know, maybe y'all will meet somebody too. And then we never left. But my wife teaches mathematics here. We have 2 kids. Keith is 11. My daughter Brooke is 8. And we have 1 cat now. The last one died last summer. It was sad. That was the nice cat. The one we've got now is the strange, confused cat. But like I said, I run the Money Education Center. And if you don't know anything about us, these are our primary goals. But essentially, in a nutshell, our job is to try and fill this giant gap that is missing of financial knowledge for our Aggies. There's a giant gap in financial knowledge in America. I'm going to get into that more into detail, but it's here too. A&M is not excluded from that. And we want you to be financially successful, not just in college, but for a lifetime, because as I'll say later, you're going to encounter more and more tough financial decisions because personal finance is not getting easier, it's getting harder. And I'll talk more about that in a little bit. But that's a little bit, that's my full-time team members. We also have our peer advisors. We got Kevin right here. We have Israel and then Jessica. And we rely heavily on them. But you could work with any of us at the center regarding learning more about money. In terms of what we provide and services, we do presentations. Right now, they're all virtual by and large. I say we have walk-in advising, and I just want to explain what that means currently under the COVID circumstances. Scholarships and financial aid has hijacked our lobby. That's okay. We allowed them to. They needed it. So we do not do walk-in advising in person right now or by appointment right now. What we do is you can go to our website, money.tamu.edu, and you can get in line for a callback, immediate callback, or Zoom advising. So on a walk-in basis, we'll see you don't have to wait for a different day to have an appointment. But we also do private appointments as well, which are also virtual too. In addition to our basic services, I just like to highlight our 3 credit hour course because there is no form of financial education instruction that I've found that's as effective for a student to learn about money as in the classroom in a course, because we get you for 20 plus hours a semester and you're incentivized by your academic grade. And so you have a good reason to be in the seat and learn about money. It can count as a social and behavioral sciences core elective now. It can also count as a general elective. But by and large, our students love the class. We have 250 enrolled this fall, and it fills up very quickly. So when pre-registration opens, if you want to enroll fast. If you want to learn more about us, what we do, what we can offer, how we help you, just visit our website, money.tamu.edu. But I just wanted to briefly cover that because a lot of students don't know we exist. They don't know what services we provide. And if you want to learn more, you can go to our website. But what I really want to do now is spend the rest of the time addressing what Kevin asked me to address, which is what are some tips I have for you as students and then as former students? And again, stop me anywhere you want me to. So a few recommendations. I have about 5 to 7 recommendations. I could go on forever, but we only have an hour. So we're going to start with the obvious. I know it seems patronizing. I do not mean to be patronizing by saying graduate. That's obvious. That's basic. Of course you should graduate. But there's some statistics I want to share with you that emphasize why graduation is actually the #1 financial priority you should have. I can talk about budgeting, and I can talk about wealth management and growth, credit building and protection. But from my personal perspective, this is the thing that's going to have the biggest impact on your financial future above anything else I can teach you at the center. So we'll start there. So the reason I say graduation is that important, and I'm trying to emphasize not close to graduation. I have a very close friend. He got within 3 to 6 hours of graduation. And then I'll be honest, he got frustrated and annoyed with one of his professors and just said, I'm done. And he walked away. And I just got to emphasize, some college does not cut it. You have to actually get the degree. 6 hours away, 3 hours away will not cut it. The reason being is because when you go to apply for professional jobs, you can't check the box that says, I have a bachelor's degree. That immediately makes you ineligible for so many jobs. What that results in is a loss of about $1 million in lifetime earnings. Now, this is from the Bureau of Labor Statistics. This statistic only grows, but it's been roughly about $1 million for a while. So time has proven that you lose $1 million if you don't actually obtain your degree. And so that's something that I just have to emphasize the ramifications if you don't. Close is not good enough. But then there's the other side of it. It's not just about lifetime earnings. You know, we talk about COVID and we talk about how badly it's affected people health-wise, but on the financial side, we haven't seen unemployment rates like this. They're off the charts. And so when you look at last April, which was pretty much the peak, we had an average unemployment rate of 14.7%. Now, but if you look at this chart, you can easily see for the people who did not actually obtain a bachelor's degree, it was about double the unemployment rate for those who did. So the degree is not only going to increase your lifetime earnings significantly in a way that budgeting just can't do, it's also going to protect you on the downside, on the lower side of the end of that, you're going to be able to keep a job. And so again, I say graduate. And again, I know it sounds patronizing, but these statistics to me reinforce that this is why you're here in college, is to earn the degree so you can get a job that will pay the bills and put you in a good financial place, and also let you enjoy day-to-day at work and not hate it. My second recommendation is hurry up. And again, I know this sounds almost borderline offensive. I don't mean it to be. I want to share some information with you that, again, a lot of people don't have. And it reemphasizes the importance of getting there quickly. A lot of times when we talk about time to graduation and people think about a super senior year, an extra lap, they're worried about the tuition and fees or the housing. All of that is a minimal loss when you compare to what you lose in lost professional income. So if you stay an extra semester or an extra year, it's not just that extra debt you tack on because you stayed an extra year. The important part is actually all that lost professional income. So at A&M, the average salary for our graduates is about $60,000. So if you stay here for an extra year, you lost about $60,000 plus the added debt. We're talking about $66,000. The average debt, student loan debt for our graduates at A&M is only $23,000. But you stay an extra year, you lose $67,000. So again, I say that's why you work with the academic advisors. You make sure that you're following a degree plan. You're not changing majors too many times. That is actually a financial priority. It's not just academic. So I just want to emphasize the importance there. And then also, you know, it's not just about getting to the finish line and having good grades. That was my mistake. I was a finance major. I thought if I had a finance degree with good grades and I did a student worker job that I was very proud of, they let a student worker like me run the entire payroll for the whole vet school. So a little student worker, I mean, and I'm just saying, like, I got paid $8 an hour and I'm literally paying all the doctors at the vet school. They're letting me sign their checks and stuff. So I was proud of that. That was great. And then I had a pretty good GPA and I thought, hey, I'm set. I'm ready for graduation. Couldn't have been further from the truth. There are definitely different things, that life skills that you need to learn, but also I say connect with the Career Center. I know you've already heard from them, so I'm going to barely touch upon them. But to me, this is why you came to school, was to get that professional job that will pay well, that you can enjoy for 40 years. That's the main reason for getting a degree, for getting a bachelor's degree. And again, my error was thinking that I didn't need to go see the Career Center, but I'll be honest, I was also terrified. I didn't want to go talk to them and show them how little I knew about real life and about meeting with a professional employer. And so I was scared, so I never did. So what's the result of that? When I got out of college, I had very limited job options because I couldn't write a resume. I couldn't write a cover letter. And I was terrified of interviews, just terrified. So I blew a few of those. And what that results in is my starting salary for my first job, the only one I could find, was $24,800. When you start that low on a starting salary, you can get a 10% raise each year. It's still not going to add up to much. I didn't know how to negotiate for my salary, they should have been paying me a lot more than that, but they knew they could get away with it because I wasn't prepared. And so I say, another financial tip I have for you to make sure that when stuff like a pandemic come around, a financial crisis comes around, and to make sure that you are able to still secure a good job after graduation is to take advantage of their awesome resources. The only reason I ultimately got a job is because I went to the Career Center on a weekend, and they weren't allowed to see former students back then. And this lady came on a Saturday just to help me out because she knew how pathetic I was. And she helped me get a job. But I say take advantage of their services. Specifically, I would recommend, did they talk about SIGI 3 at all last time?
Sorry, I had trouble unmuting my mic, but no, they didn't mention it last time.
Okay, I just want to talk about a few of the resources I think are really helpful. One of them is SIGI 3. It's a self-assessment that lets you associate your talents, your interests, your abilities with actual professional job occupations after college. I know that when I was in college, I didn't know what was out there. I didn't know how to hunt down a job or figure out, it's so huge, there's so much out there. It'll ask you a bunch of questions and it'll tell you what jobs might fit you. So it takes like 5 minutes to do. But I would use their SIGI 3 self-assessment to figure out what are good occupations for you after college based upon your interests and abilities. And then what I would do is once you figure that out, use their My Majors tool to figure out which major will help you get that occupation. And that's what this tool does. So then you know what to major in. Because I don't know about you guys, but I only majored in finance because my dad told me to. I really had no clue what I should do. And so what occupations, other than a financial planner, I didn't know what occupations a finance degree would open doors to. Y'all want to know that. And then finally, I would say with them is once you've figured out your major, make sure that whatever the average salary is for that major is acceptable to you. So the Career Center does a post-graduation survey every semester, and it shows how much are our graduates earning. And then you can actually see, wait, now I was going to graduate with ag communications and journalism. The average salary is 49 grand. But maybe you may say, that doesn't cut it for my expenses. That doesn't work. So maybe that major isn't the right fit for you. But you should have an idea of your earning potential post-graduation based upon the major you select. You shouldn't blindly graduate and think, I'm going to be fine. Because I know I did. For some reason, I thought getting out of college, they were going to pay me 60 to 70 grand. How did I come up with that number? I made it up. And so I just say, use that tool. It's really helpful. Now, we talked about graduation and hurrying up and getting there earlier, and then also preparing for graduation and getting that professional job. That is key because, I can teach you how to manage money, but if you don't have any money, there's nothing to manage. So I do think having that professional income, knowing that you're going to have some and that it's going to be a good job that you'll like and so on is key to financial success after graduation. But in addition to that, that's not enough. I think you need to grow financial skills, and there's a couple of reasons I'll get into. One is, right now as a student, money's stressful, and it is for a variety of reasons. You all have to make copious financial decisions. I mean, it's a lot of things that you have to make decisions on frequently. I mean, I feel bad for our freshmen. You come in as a freshman and they just dump all these decisions on you. It's a lot. And you would think that when you graduate and you finally start earning professional level income, that stress is going to go away and it'll be good. but studies don't show that. Instead, what studies show is that for our average American, they still find money to be the #1 stressor in their lives. It's more stressful than the economy. It's more stressful than their job stability or their personal or family health. And that's because money influences all of those things. And so year after year, the American Psychological Association finds money as that #1 stressor for your average American, not just for your college students. And, you know, as Americans, we don't really necessarily want to learn about money. We would much rather take a shortcut of some kind, you know, whether it's finding someone pretty who has a lot of money and just marrying them, problem solved, right? Financial stress goes away. Yeah, you know, problem solved. I've seen that scenario, and it may start nice. It doesn't always end well. And so there's definitely a negative side. Winning the lottery, I know people who are banking on that. They're banking, I'm going to win the lottery. It's going to happen. Problem solved. The likelihood is what? You have to get hit by lightning twice before you win the lottery. Or as a former financial planner, I'll tell you all something kind of dark and sad. A lot of parents are concerned that some of their kids are just waiting for them to die so they can have their money. And they're just waiting for that inheritance. And they're also worried that that money's going to ruin them. So there are definitely people out there who are banking on an inheritance to fix all their financial concerns. Or if nothing else fails, or nothing else succeeds, just go ahead and sue somebody. Make their money yours, problem solved. But you know, all of those American solutions they have major negative side effects that I just say aren't worth it. So I still say our best bet on dealing with financial stress is to actually learn about money, which again, I'll get more into it later. America does not do a good job putting this systematically through your education. It's not there. And this is why you are not alone. If you're like, I don't understand money, I'm not very good with it. Well, probably neither do your parents, because most Americans don't understand money. So you're not alone. Don't feel bad about that. 57% of Americans are financially literate. So 43% are not. And when I say literate, I don't mean financially capable. I mean meeting the bare minimum requirement to get by. Only 57%. Now we are the #1 economy in the world. We make more money than anybody, but we're 14th globally when it comes to managing, understanding our money. That's not good. And one of the problems, like I already said, is money's more complex than ever before. So for y'all, it's not going to get easier. So learning about money is huge. And as a result of all of that, our savings rate is less than 5%. Again, we make more money than anyone. We save less than a lot of other countries. And I'll get more into why we don't save more later. One of the things that I was curious about was, okay, that's the average American, but when it comes to financial knowledge, our Aggies are better, right? They must be. We're Aggies, you know, that's just how it is. But when we did a financial wellness survey, we weren't. Only 44% could answer 3 extremely basic financial literacy questions correctly. So it showed we have a gap in financial knowledge right here on A&M soil. And what that same survey showed was that our first generation students, only 25% could answer that same 3 questions correctly. So it's even more important that you as first generation students take advantage of our resources at A&M. If you look nationally, most schools do not have a center like ours. They don't have a course like ours. They have no resources. You're paying for all of this. Take advantage of it. Fill that gap. Don't be a statistic. Learn about money so you can take care of you and one day, hopefully, your family. And so,
I have a question, Nick.
Yeah, go ahead.
Do you know over those 3 questions?
I do have those 3 questions. They're kind of lengthy. I don't have them memorized. One relates to, I believe, inflation versus savings rate. You know, inflation outpacing savings. What does that mean? It's put very simply. Another one has to do with the rate of return. So if you earn X amount, you know, 5% on $100, would you have $105 at the end of the year, or would you have more or less? It's very basic. These are not hard. These questions were developed by Georgetown University, which is actually the people who defined financial literacy. They do a global study on this, and then everyone else steals their questions, including us. Yeah.
Thank you.
Yeah, sure, no problem. Well, there, you know, I've been really winded here. Any questions right now? Okay, we'll keep going. So I keep talking about the need for financial knowledge and skill, and that's a way for you to be prepared financially as a student. And then as a former student, when we have these downturns in the economy, you're not with the herd of Americans who are struggling horribly. But great, I understand, but how does the knowledge actually help? And so I want to actually show you, if you have the knowledge, it's pretty basic, but if you have the knowledge, and you're having to make more financial decisions than ever before. Your parents didn't make all these financial decisions that you're making. Then when you have to make those decisions, you'll make the right decisions. Your behavior, your financial behavior improves. If you make those right decisions as they come along in your life, then slowly your financial situation gets better. And what I mean by that is we're actually talking about your income grows, your expenses shrink. That means your monthly savings are more. Then with that savings, you can go pay off debts, or you can buy stuff, you can grow your assets. All of that is your wealth. And wealth, and I'm sure you've read about this in the papers and so on, but wealth is what separates Americans. How much wealth do you have? And it's what you own minus what you owe. And so it's the cushion for when you lose your job. Could you sell all your stuff, pay off all your debts? Do you have any money left over that you could live off of until you get a new job? That's what wealth is. And the financial skill allows you to grow that wealth, that financial situation, which allows you to reach that, what's called a state of financial well-being. And that's a real fluffy term. I'll be honest, I never liked it until I learned what it really was. And it's really, in a nutshell, it's easy. Financial well-being is, I feel secure. I can pay all my bills, not really worried about next month. I'm good. But I also have a little extra money on the side to go have fun with, because you have to be able to enjoy life. Financial well-being is not surviving. It's surviving and thriving. You're having fun too. And so that's what we are all reaching for. That's what I am reaching for. I'm looking for financial well-being every day, but it all begins with having the knowledge to make the right decisions so my financial situation changes, so I can feel secure. I can go, you know what? And this is not normal. We're going to the Republic tonight. We're going to go buy steaks. That is not common for me. That place is ridiculously expensive. But on an anniversary, something big, I want to be able to do that without it also sinking the whole ship. So you talk about, you know, growing your financial knowledge, and that's where our center can come in. Again, you can have appointments with us. We can do presentations, but learn about whatever it is you're passionate about, whatever's most interesting to you. But I'll find, you know, I find often with students, with anybody, y'all, but especially students, y'all are incredibly busy. Y'all are crazy busy. And I don't blame you for not having time or enough energy left in the day to go learn about money. So you have to have a motivator. Something's got to be shoving you towards it, or you're not going to do it. And I don't blame you at all. And I think that comes back to that motivator is your goals. You know, and what is it that you want to do with your life? Maybe you want to go to Tahiti or Germany. Maybe you want a new car. You know, there could be, it's personal to you. I knew a guy, he was determined. He was going to own a Lamborghini as a student. And I wanted to tell him, I don't know how realistic that is. Actually told him, I said, let's talk. I don't know if that's realistic. And he showed me financially how he is going to get there. And in the end, I had to say, that's a real goal, man. You're actually, I think you can actually own a Lamborghini. That's insane that I can say that. Never thought I could. What motivates you? And so you have to figure out what is going to drive you. What's that goal? Now, these are a few goals that most Americans have. We like our cars. We like to get married. And then on top of that, home ownership. I know that it's not as popular as it used to be, but it's still definitely a goal for a lot of people. Children, 1, 7, 8, however many kids you want. But those goals, even retirement, all of them have some kind of cost to them. And so you figure out what it is you want to achieve in your life, and then you estimate what the cost is going to be, and you start working towards it. And that's what motivates you to be good with your money every month. average American wedding is 35,000 bucks. That's crazy. You don't have to do that. Mine was on the Frio River. I think it cost about 12. It was awesome. Everybody still says it was the best wedding ever. All they did was float the Frio. Of course it was. And so, that's the kind of stuff that, you can find ways. You don't have to pay 35 grand. The average car is $38,000. We buy 9 in our lifetimes as Americans. You don't have to do that. My used Toyota Corolla, which I'm very proud of, 2014, I bought it for $10,000. And it's a great car. So figure out what you want to achieve, figure out a dollar amount that seems realistic to you, and then start working towards it. That's going to keep you financially on a good path. And the way to achieve those goals is, and it sounds boring, but it is absolutely the truth, is to budget your money. You have to know essentially where's your money coming from and where is it going to, and then you have to make a plan for it. And that's what a budget is. You simply say, what money do I have coming in the past? Where has it been going to? And then going forward in the next few months, where's my money going to come from? Where's it going to go to? And make a plan for that. And essentially what you do is by making that plan, you're hopefully increasing your income, reducing your expenses, and that increases your net income, your savings at the end of the month. You can then, like I said, take those savings. You can buy stuff, grow your assets, or pay off debts, your liabilities. That grows your wealth. And again, that is going to be what separates you from everybody else when it comes to your feeling of security and your ability to go out and do stuff if you want to go do it. And enjoy life. There are lots of ways to budget. I can't cover them all. There's just no way. And you have to find a budgeting method that works for you. A lot of people are going to try and sell you on theirs. Pick something that doesn't bore you to death, something that you feel like you could do. For me, I use a variation of the 50-30-20 rule, where at the end of each month, I look at my after-tax income and I say, what percentage went to what I needed to buy? Was it 50% or less? What percentage went to what I wanted to buy? 30% or less of my after-tax income, and the rest should be going to savings and extra payments to debt. That way I know every month at least 20% is growing my wealth. It's going to savings or it's paying debts. The envelope method, I've had a few friends who made good income. They made a lot of income and they were utterly broke. And it's because they had a closet full of the most expensive shoes you could ever imagine, 200 pairs, and they were just spending more than they were making. And that was a guy, by the way. He was former associate athletic director here at A&M, and he had the best attire you could imagine, but all the money was going into that. And eventually his wife, who was awesome, she said, okay, we're on the envelope method. Every month they would take the amount of cash they needed for each expense for the month, put it into an envelope marked for that expense, and then as the expense came up in the month, they'd pay it out. Now, if that envelope went dry during the month, they were done with that type of spending. If it was eating out, no more eating out. But at the end of the month, if any envelope still had money in it, that went into savings. So it guaranteed, it was hardcore, it guaranteed that they would not overspend on any category and that they would save money. And both two families I know who did that got really well off. They totally turned their financial lives around. But it is a stringent, hard type of budgeting method. I highly suggest using a tool like mint.com or Personal Capital, something along those types of tools, which basically just pull in all of your account data, all of your transactions for bank accounts, credit cards, student loans, and then it categorizes that data for you, shows you where you're spending your money, where it's coming from, and then you make goals for those categories and say, okay, this month for eating out, I am not going to spend more than $200. And then it sends you alerts throughout the month telling you if you're getting close, so that if you're getting close, you stop eating at Torchy's, whatever that is. And so it keeps you on track. And a lot of people have sworn by those types of online tools that it's really helped them change their whole financial situation without having to kill themselves by tracking everything in Excel or on paper or something like that. That's a lot of unnecessary work. Now, if you love Excel, please do it, whatever works for you. But those are a few tools you could use for budgeting. Again, pick one that works for you.
Nick, wait, can you go back?
Now let's go
I have
back.
an example. So when I graduated, I definitely used the 50, 20, 30 rule because I had student loans and I'm still wanting to save up for a new used car for myself. My loans, I did not borrow a whole lot compared to other students, but it was supposed to be paid off within the next 5 years. And I started first using the 20% towards savings to pay it off, but then I realized that 30% was a lot for me to spend on myself. And so I switched my 20 and my 30. And so I ended up saving 30% and then spending 20% on myself. And what ended up happening was that instead of 5 years, I was able to pay off my student loans in a year and a half. So that was really awesome. I did not have to worry about interest. I didn't have to worry about like everything else that would have come with it. And then since that's paid off, all that money that was going towards student loans is not going back towards saving for a car. And so now I'm getting closer and closer to like achieving my overall budget for this new car. But at the same time, I'm thinking, oh, like my current car is working fine. Maybe I can just keep saving and saving until this car just kind of breaks down on me again. But yeah, so like the whole car situation kind of like resonates with me. I'm like, do I really need a new car or should I just stay with this one and not put myself into debt? So yeah, it's that's always in the back of my head.
Okay, I have a comment on the whole thing because I did that too. I used to have a Mitsubishi Galant that I inherited. It was a total lemon. I mean, bad. It had been multiple car wrecks totaled. I didn't know any of this because I inherited it. It had been flooded at one point. And at some point, the Christmas lights just came on. That's what I call them when the entire dashboard lights are on all the time. So you don't know, is the car on fire? I don't know. I mean, you just assume everything's well because you don't see or smell smoke, And I was always going back on that saying, should I go get a new car and make a new car payment? And I say, if it's dangerous, yes, it's not worth dying for.
Yeah,
So
I think that's where I'm at.
and I'm not saying that's where you're at, but I took it too far.
Well, I am a little scared of getting in my car here and there sometimes. I feel like the next car repair, if it's more than what it's worth, I would not put that money into the car anymore. But yeah, I mean, it's working fine. I'm not in a rush to get a new car. I'm also thinking about graduate school and that's another thing I would have to pay for and I don't want to take out too many loans on that either. So I would have to make a really large cash deposit for this new car or just not completely take out car loans and just pay it up front, $12,000, and then that's that. And I just get that car and not worry about car payments being into graduate school and paying off those loans as well. So it's just the process of all of that.
Which I would also say this, like, don't deplete your emergency fund just because you don't take out the car loan. My wife and I had that opportunity where we could have bought her nice car in total cash, and we were considering it. But rates are so low right now. Interest rates are. Now, back then, they were about the same. When we did the math, if instead we only paid for half the car in cash and took a loan out for the rest, it was $11 a month in interest. Who cares about $11 a month when lets me keep more liquidity for, whenever they choose to fire me, and so I've got some money. So that's something that I just do emphasize. I'm anti-debt too, but figure out how much the interest is going to be. And as long as you don't totally deplete your emergency fund and you're freaking out every night because you're like, I don't know if I'm gonna have enough money for food this week. That's not worth it.
Oh yeah, no, that's without touching my emergency fund. But the 50-20-30 rule, that really worked out for me because at first I was in the negatives. I was always constantly overspending. And it took about 3 or 4 months for me to finally get the hang of budgeting, just because I really wanted to get used to it and get the hang of it. Because I did had all of these other goals. And recently, maybe 4 months ago, I started being back in the positives. And besides me putting money into my savings, I had left over like maybe anywhere from like $200 to $400 just because I just didn't touch it. But then again, it's because of COVID maybe. But even then, I can still do DoorDash. I can like get direct through stuff. But yeah, we'll see after COVID if post-COVID happens. how much
COVID has
money
made
or
me
how
wonder,
that
too.
trend happened.
That there's, if I get to the end of the month and I'm like, how did we spend the same amount this month as we did a year ago this month if we're under COVID and we're not eating out as much? Where did it go? And then I have to go start doing digging because we should be saving each month. But yeah, it's interesting how things have changed on where the money is going because my money is still going somewhere. But yeah. Were there any other questions or comments at all? Like, I don't need to monologue.
So I had a question, Nick. It's kind of like an overall question.
Yeah.
So I want to say probably like, I hope my parents don't hear me because they might be like right outside the living room, but probably like the worst financial advice I've ever received was from them because they didn't have a strong financial background.
Yeah.
And luckily their primarily language is a different language, so they might not understand what I mean by that. But what are some things, or what are some like financial myths or like the worst advice you've ever heard, or like have had someone receive where it like negatively impact them, and how basically what's like the worst advice you've ever received, or like what's the worst myth about finances you've ever heard?
A lot of it goes back to debt. So, one that I heard that, it didn't make any sense to me. I had a neighbor, and he thought that if he could have paid off his mortgage sooner, but instead he decided to keep it because there is a tax deduction for mortgage interest that you pay each year. And so he thought he was saving money because it was reducing his taxes. But what I had to explain to him, and he didn't really like it, was that you are saving a percentage of every dollar you pay in interest, not the whole dollar. So you're still wasting about 90% of every dollar you pay in interest is a wasted 90%. The other 10%, maybe you get back in a deduction. So carrying that debt does not help you tax-wise enough, not even close, to be worthwhile. There is no good reason to carry debt unless you have to. Another thing that we hear a lot is students are told constantly, not just students, parents think this, not just students, Americans think this, that in order to grow their credit score, they need to carry a balance from month to month on their credit card. And that's totally false. In fact, that actually hurts your credit score. What you actually want to do is you do have to charge something during the month on your credit card. You wait until you get a credit card statement at the end of the month from the credit card company saying you owe $10. You now have 21 days to pay it back. And if you pay back that $10 during the 21 days, you will not be charged any interest. But it also gave that credit card company time to tell the credit bureaus who decide your credit score that you borrowed the money and that you paid it off exactly on time. If you carry the balance, what it does is, one, they're going to charge you interest now. And then two, that works against your credit score. Carrying a large balance on your credit card does not help your credit score, it hurts it. Another mistake on the credit cards that people do a lot is they go, and this is common, they go swipe their card at the grocery store. So they say, I used my credit card, and that same day or the next day they go back and they pay the balance off on the credit card. That just means that at the end of the month, the credit card company will say, you don't have a credit card statement, and I have nothing to report to the credit bureaus. You didn't borrow from me. So now it's not helping your credit score. So the best way to improve your credit score that I know of, and y'all can do this right now, is get a credit card that has no monthly or annual fee, put Netflix on it each month or whatever recurring small fee that you have, same dollar amount each month. Wait till you get your statement that says you owe us $10 for Netflix from the credit card company. And within that 21-day window after that, turn around and pay it off. You can have it auto paid by your bank account. So now the credit card is auto paying Netflix. The bank account is waiting until after the statement date, but then auto paying the credit card. You are now doing absolutely nothing except for watching Netflix, and your credit score is growing the fastest it can grow. So I've known students get up into the mid 700s doing that. They did nothing else. And that's all you need is about 720 to 750, and you will now get the best interest rates you can get. So that's a few things I know of.
Yeah, and I also have another question. And if anyone else has any questions, feel free to type them in the chat or unmute yourselves and speak up. But I've heard a lot about like, well, I follow a lot of like financial gurus and things like that, where they sort of like tell you like the best way to save your money. But I feel like a lot of them don't really understand the background of where people come from. Like I want to say like Dave Ramsey, for example, he kind of like I don't know, he kind of like forces something in your mind where it's something like I work 60 hours a week and I went to school. If I could do that, anyone could do that. But for like first generation students, it's like a lot more than just working and going to school. It's like taking care of family as well, and just a bunch of other stress factors that come into consideration. So, what would you say is like the importance of putting your mental health first when you're figuring out your finances?
Man, no, it's mental health first. And now again, but I will emphasize that one of the things that will help your mental health is not that you're the richest person on earth or getting there as fast as you can, but that you know you're in an okay financial place. So it is important that you're budgeting, that you know where your money's coming from, where it's going. That will help your mental health. I promise you, getting it out of your brain and into Mint or Personal Capital or on Excel or whatever. Now you can look at it once a month. That's it. And know that that's good. Now, in terms of being so frugal that you're losing your mind and you're going to quit, remember what I said was the number one priority for y'all is not to be perfect budgeters or to save every penny. It's to graduate as quickly as you can. That is the number one financial priority. I don't feel you can do that effectively if you are so mentally overwhelmed that you're depressed, you're fatigued, you're going through states of exhaustion. Your emotions are a roller coaster. So no, I think your mental wellness has to come first. And that extends into, after graduation, into both work life and personal life. One of the major things that employers look at when they decide if they want to hire you or if they want to decide they want to promote you are your social skills. Well, if you are mentally wiped out all the time, you've got nothing left, you can be the best at your job, but nobody likes you. That doesn't help. And then for marriage, if you're talking about what affects your finances most, it's divorce. If you are mentally unwell because you are pinching every single penny as a couple or as an individual with that other person, and then it hurts y'all's relationship and you get a divorce, you wasted everything. So I have a really, really great former student. I mean, I just can't say how impressed I am with her and what she's accomplished in her life. And she holds that money close and she's very careful with it. And I had to have a conversation recently where I said, y'all need to go out to some nice dinners and have some fun, because that if you push yourselves too hard as a couple, you may not be a couple, and now you're going to, most of your wealth is going to go away. And so if you want to help yourself financially, every now and then you got to go have some fun. I know that sounds strange, but it's true. So mental health is huge. I can't emphasize that enough.
And we also had a question in the chat if you're able to see that, or I could read it out to you.
That'd be great. I don't even know where to look, man.
All right. So it says, my mom told me to get a Discover card and make bigger payments on it and pay off a certain amount every month to build my credit score. I'm not completely sure how that works, but is she right?
So you actually don't want any balance to carry from month to month. So she's right that you get a Discover card or whichever card you want. Again, no monthly or annual fee. Discover is probably one of yours that's good with that. And you want to put just one small item on it each month. Wait till you get your billing statement at the end of the month. Then you have 21 days, you pay off that little balance. So you don't want to get some big balance and pay off chunks of it each month. That is still leaving too big of a balance. So that hurts your credit score. And now they're charging you interest because some balance is carrying over to the next period. You want there to be no balance. When the billing due date comes, there's no balance. You've already paid it all off. Now, if you're carrying a balance on a credit card right now and you're saying, well, I would like to pay it all off, but I can't financially afford it, let's talk. Because there are student loan options that are way better for you than carrying a credit card balance from month to month. Credit card interest rates are anywhere from 17 to 25%. That interest is compounded daily. Every day they take the interest that accrued and they add it to the next day's interest. That's crazy. The student loans, that you could be eligible for a subsidized loan that has no interest in college, 2.75% after college, and it only begins compounds interest once after college, like there's no comparison. So if you are carrying a credit card balance right now and you're like, I don't like this, please talk to us at the center, and we'll talk to you about what loan options you have to wipe out the credit card balance and then go back to a single small charge each month, and you're paying it off every single month, and your credit score will go up really fast. It blinked at me. I feel like there's another question.
Yeah, the person who asked that just said thank you for the information.
Okay. I've got, when it's on the share screen, like I feel like everything's weird. So were there any other questions?
I didn't see any, but I'll let you know if any come up.
Okay. Terrific. Let's see here. You know, with the budgeting, when you start budgeting your money and start just taking a harder look at it, and this is, and you're not alone, this is, don't take anything I'm saying as condescending to students. This is us, me included, Americans. This is our problem, and this is what we need to do to kind of address it. But through the budgeting, I figure out where we're wasting our money. And that's what we call just a latte factor. It's money that you're spending on something that may be unnecessary. You definitely don't need it. And maybe it's not that you're spending money on it. That's the problem. You're spending too much money. So if you like lattes, I'm not saying stop lattes. I understand it's hard to kick that. I love coffee. But maybe pare it back a little bit, you know, because what happens is that slowly eating away at your savings each month. And then the next thing you know, you're swiping your credit card, which is very convenient. You're growing that credit card bill, and that interest is occurring at 23%. And again, I've talked to people in their 40s and 50s who have so much credit card debt on so many credit cards that my only option I can tell them is you need to file for bankruptcy. You have no option left because they let it get out of hand because it's so easy to use the credit card on these latte factors, and they don't even realize the balances are growing up. Your credit card balance should be 0 at the end of each month. Most other loan options are better than a credit card. We just use the credit card to build our credit score. We don't let it use us. That's the goal anyways. Now with these latte factors, I just want to emphasize that you spending money on all this stuff, it's not just because you're bad people or we're bad people. It's not. It's a systematic and intentionally done approach. And I feel the government is kind of to blame partially. If you look at our economy, gross domestic product is just the end result of our services and products. All final sales, what does it net out to? That's called gross domestic product. And essentially, those are the 4 components of gross domestic product. Look at which one is the lion's share. It's you and me buying stuff. It's we're going out and we're buying stuff. Now, if we don't go out and buy stuff, the economy is going to struggle. So the government is not going to tell you not to go buy stuff. Instead, they're going to have tax-free weekend. They're going to have all these different incentives for you to go spend your money. But then where does the debt fall? Well, it falls on you guys. Y'all are keeping the economy running by spending. You also get to carry the $14 trillion in consumer debt. So I say this, it may be good for the economy for you to spend, but that's not best for you. So I say, figure out what your latte factor is, get it under control, save that money instead for your own future. Don't let everyone else try to sell to you because you are constantly being sold to for a variety of reasons. And it's not just the federal government. The state government makes hundreds and hundreds and hundreds of millions of dollars in a single month on sales tax. They need you to buy, but that's not what's best for you. Instead, I say, sock it away. Figure out what your latte factor is, set that money aside, and take advantage now by putting the money away now in a savings account or investing it in the market and start earning interest or return on interest. So if you put money away today, it'll start earning interest. If you wait 10 years, you miss out on all that interest plus all the interest that would have been compounded on all that interest. You lose a lot of money in the long run. So saving money while you're young right now and setting aside is so much more effective in the long run than waiting 10 or 15 years. And so I'll just give you an example. If you decided to kick coffee, you know, Starbucks, let's say you're going every day for a latte, $5 a day, but you kicked it for 40 years. and you said, I'm not going to have that anymore. I'm going to take that $5 and instead I'm going to put it in the market, earning 6%. Now, 6% is an extremely believable rate of return over 40 years, totally believable. The actual average is closer to 8 to 10% for the last 40, 60 years or so. And so you could earn 6% in the market. But if you did that, how much money would you have at the end of 40 years? And it may surprise you. What it ends up being is almost $300,000, all because you stopped going to Starbucks every day. Now you did it for 40 years and you set the money aside in the market earning 6%. That's all very doable, but you end up with 300 grand. For a lot of people, that's a big chunk of retirement. And so it's either that or time value of money goes the other way too. If you put it on the credit card, it's not charging you 6%, it's charging you 25%. It's going to compound interest daily instead of monthly like most savings accounts. And so now it's actually working against you. So that's where I say, instead of spending that money on a credit card, save the money and set it aside, and you take advantage of time value of money. Don't let the credit card companies take advantage of that from you. That's a little bit about, just to try and motivate you to start setting aside the money now versus, just saying, I'll wait another 10 years. We talked already about credit, but just to emphasize, there's some really good reasons why you as a student right now should be building your credit score. One of them is actually the pandemic. You find out that you still need to go to school. You need to afford school. But what if you've used up all your federal student loans? You have no co-signers. You don't have a credit score. It's going to be very hard to get out a student loan if you need additional funds. But if you've already built up your own credit score, you don't need a co-signer. You don't need to lean on mom and dad. You can go take out your own alternative loans that are all in your name. And that's a best case scenario. So I say, do what I said about the credit card. Start using it a little bit each month, paying it off in full every month. Start building up that credit score. You're looking to try and get between 720 and 750 on your credit score. That'll get you the best interest rates on credit cards, on car loans, on mortgages, as well as student loans, should you need a private student lender to lend to you. And then think about what you can control when you're trying to grow that credit score. One, pay your debts on time every single month. If you are late by a single day on a single debt, that brings down your credit score from perfect to actually in question for missing a single payment. So that is huge. You can't miss a single payment. You want to be exactly on time. And then also, I talked about carrying a balance on a credit card. When you carry a balance, that works against your credit score. It's about your debt to credit ratio. You want to have a lot of credit where the credit card may say that you could borrow, if you wanted 10,000 bucks, but you've borrowed zero. That's a great debt to credit ratio. But if you've borrowed 8,000 of the 10,000 allowed on your credit card, that's a really bad debt to credit ratio. That hurts your credit score. So those two things you're very much in control of. And so if you just, again, be aware of that while you're trying to build your credit score, you can build your own credit score, which will help you be more independent of your parents, be more independent of your co-signers. And again, when you get to the stage where you need to go buy a new car, more likely you're going to get approved for an auto loan and get a good interest rate and so on. So that's another thing I wouldn't hesitate. I'd get to work on that. These are just a few credit cards you can look into. Student loans, student credit cards, but as well as secured credit cards. If you can't get approved for a student credit card, a secured credit card means that you give them some cash, and essentially it's a deposit. That is now your credit limit. And you start using the credit card each month, but also paying it off each month. After about 8 or 9 months, they'll say, that's a good borrower. They'll give you back the money you gave them, and now it's a legitimate credit card. So anyone will lend a secured credit card to you because there's no risk to them. So you can take out a credit card if you're worried about whether or not you'd be approved. So that is, that's what I had. I totally forgot to have y'all do the QR code at the beginning for attendance, but Kevin, I'm sure he's got my back over there. But there's a feedback survey if you want to fill it out. But what questions do you have? Comments, anything? I can stop sharing now.
I don't see any in the chat, but I know they have your the money education contact information in case they have any questions. And I'll be sure to send out the sign-in sheet in the I'll put it in the description as well for anyone who watches it after, and I'll send it in the group chat. So if anyone needs the sign-in sheet, we'll send it in there as well, so that the Money Education Center can get their attendance recorded for this presentation. But other than that, I just want to add a couple of things I want to say about the Money Education Center. I already told Nick this, but I've been so grateful for the opportunity he's given me to grow as a person and financially by bringing me on into the Money Education Center. I've learned so much through his under his wing, I guess, whether it was as a student in his course or just working here. It's just really great knowledge, and it really helps you a lot, whether it's like later in life or right now. It's really beneficial, and it's changed my life, because I want to say before I got this job, I had no idea how to handle money, and I had no idea what I was doing with my finances. But after I got this job, I took less in student loans. This year, I actually budgeted to a point where I didn't have to take student loans this year. So that's something that really benefited me a lot, and it will benefit me a lot in the future, because I don't have to pay back as much. So I highly encourage everyone to take advantage of this resource. It is a really helpful resource. And I know I sound biased, but I bet Israel and Yesenia can back me up in saying that it's one of the best resources on campus.
I want to piggyback on what Kevin said. I took 235, and that class was probably my favorite class at A&M. I learned so much. Right after the course, I went and got a credit card, and I started building my credit, and I just learned how to budget. I'm like a crazy Amazon spender, and I learned just to budget that. Like, I was spending unnecessary money on just random things that came to mind. And so I recommend 235 to everybody. So yeah.
It's good to see you, and thank you. Yeah, that's, you know, and I want you to take everything I said, is do not take it as condescending. I'm sharing what I've learned. I struggle with all of this still, and I do this for a living. It's something it's something we all carry as a burden. I waste money, and Amazon is a beautiful thing. Prime delivery is amazing. Saves you on birthdays. I love it. But yeah, they got us pegged. They know how to get my money. You know, so there's yeah, everything I'm saying is stuff I've learned. I'm still learning, still trying to get better at. So I hope it was helpful. I hope it wasn't too much of a monologue. I hate to do that, but I just had to jam in so much.
No, thank you for your time, Nick. I'm pretty sure everyone really appreciates all the information. If you can pass the host back to me if you haven't already.
We'll see. Where is that?
Above my little picture on Zoom, or like the video, it should be like 3 dots, and then it should say make host.
You're it.
All right, we have just a couple more announcements. I think Hasmin will tell you more about the member of the month.
Okay, so I'm pretty sure last meeting we mentioned about our point system, and we have our first member of the month, which is Iris Vasquez. She's class of 2021, a major in manufacturing and mechanical engineering technology from Houston, Texas. And then we have her little bio included in here. So every month we're going to choose our member of the month, and it's based on who gets the most points, and it's kind of like who's more active in the organization. It's just our way to say thank you for being so interactive with us, especially during this whole COVID situation.
Oh, Sorry, I skipped one. But yeah, if you guys have any shirt ideas, be sure to send them to Gabby. I know she's in the call right now. That's her email right there. We're gonna get some ready and have them available for pickup before Thanksgiving break, before we go back. We're gonna do it as safely as possible as we can during this pandemic, but we saw that you guys really wanted some shirts before this semester was over, and we thought that was a really good idea. Also, we're having a Halloween movie night and costume competition on the 28th. There's some forms for those two events to vote on the movie and on the costume, and to enter your costume. I think there's more information on the next piece on the next slide, and also the point system, which is where we give you a shout out. You're highlighted on our social media pages so that we can recognize the most active members who dedicate a lot of time. I know it's been hard due to the pandemic, but those that can come out and show their support, we would like to give them a shout out.
Hello, everybody. So we should have the second episode of the podcast dropping either tonight or tomorrow. We're still working on like a few details with the podcast, so it should be out by tomorrow. Like that's the latest. But I just want to add to what Kevin was saying about Mr. Kilmer. I work for him. I was his student as well, and I mean I learned so much from him. I mean, just like Kevin said, he changed my life basically. So I'm just grateful, grateful to be a part of basically anything that Mr. Kilmer put me on. And so he will be one of the guest speakers, so stay tuned. It's going to be a really exciting episode. And another thing that I want to mention is we have a profit share. I would say Saturday. I have to double check, but on October 16th, that's the last day we can literally sign up for it. So if you can RSVP, that would be really, really helpful. It shows Blaze Pizza that we have some people coming. So it's not saying, you're going to be there. It's just like, it's a roster and they kind of need it. And so if you guys can please sign up for it, that would be really, really, really helpful.
And this is just more information about our next meeting. Again, just be sure if you're going to participate in the costume competition, just submit it via our intake form. It's going to close October 20th, and the winners of each category will receive a $10 gift card of their choice. And also be sure to vote for your favorite movie on the form. I tried to list as much movies that I thought weren't like overplayed or actually had like good reviews, and nothing like too cheesy or anything. The top three right now are Sinister, The Ritual, and Don't Be Afraid of the Dark. So if your top three isn't on there, be sure to vote in the form, and I'll go ahead and resend that in the chat in case you're interested in that. And that form closes on October 23rd at midnight. So just be sure that you're keeping an eye on it. And then the top three will put a poll in GroupMe, and then the most voted is the one we'll watch.
All right, so once again, if you didn't get a chance to sign in at the beginning, here's a QR code, and I'll go ahead and send the link in the chat once again. So yeah.
Be sure to just follow us on social media. All our updates for our meetings and any events we're having are on those. Thank you, guys.
All right, thank you guys for coming out. That's all we have for you. Another thank you to Mr. Nick Kilmer for coming out and speaking to us. I know he's a busy man, but I'm glad he took out the time to come out and speak with us.
Thanks for having me, and y'all don't ever call me Mr. Kilmer. This feels very weird. But I have one thing. I just want to say one thing to add. Y'all were voting on movies. If you haven't seen The Conjuring, I love The Conjuring. I just got to throw that out there. Okay, there you go. I'm out. Thank y'all very much.
Thank you.
One last thing before everybody leaves. The profit share is on Monday, not Saturday. Sorry, I just double checked right now.
All right, so that's Monday, October 19th.
Right.
So we'll put it again. We'll throw all these links back in the GroupMe so you guys can be aware of everything that's going on. We'll be sure to label them so that you guys aren't too spammed with information. But thank you guys for coming out again. Thank you for your time. I hope you guys learned a lot from this meeting. I know Nick, not Mr. Kilmer. I call him Mr. Kilmer so that in case anyone else doesn't really know him, they know who I'm referring to. But Nick, he's a really great guy. The center's really great, and it's really beneficial overall. But thank you again for coming out, and have a great night, everyone.
Take care.